Oh, Uber. I did not see that coming. So, if you've been paying attention to Uber, you know that they've released on the surface, a very mixed report. However, stocks are up now. Here are my thoughts as to why. Well, first of all, let's talk about the stock market in general. If you've been following the stock market, but also following the news, you know that the stock market is detached from reality. I mean, right now we have unemployment up, businesses not getting revenue, shut down, not accepting customers, but still, the stock market is going up. All the economic impact due to the virus situation, and the stock market doesn't care. The stock market still go up. So let us not attribute the actions of the market with logic. But let's talk about Uber. Throughout the quarter, now, if you've been following my my portfolio updates, you know that I'm invested in Uber. Quite a lot for a portfolio my size. That being said, I knew Uber was going to take a massive hit this quarter. I knew that their business was going to be severely impacted due to the virus situation. I was expecting it. I was expecting a very mixed to slightly good to maybe bad report. I did not expect stocks to go up. I did not expect that at all. I mean, I was hopeful, and I do want to see Uber shares rise, but I was in no way expecting a good report. I recorded my weekly portfolio video Thursday, and before I started recording, I saw some initial news that, Uber missed their earnings per share, and I thought, oh, okay, here we go. All right, this is gonna be some shit. And then I started recording the video, and partway through, I took a look at the stock price of Uber, and that shot up. I was like, why? Why stock price go up? I had to finish the video, and after the video, I had to look into why. Let's take a look together. And just so you can see what I mean, the stock price went from 28 to 27, 27, 28, 27, well, mostly 27. It's now, it went from that to $32.69 in a matter of days. Days, my friend, days. But maybe there's more to the story. We're going to take a look at the earnings report in a minute, but let's just take a look at some of the highlights of this news story. Here we start to see a bigger picture. Gross bookings, which is the revenue from their operations and stuff, beat 15.78 billion versus 15.27 billion. Rides beat in this quarter with all their shit shut down. 10.87 billion versus 10.68 billion. Eats. I mean, people got to eat, right? 4.68 billion versus 4.32 billion expected. So far, we're starting to get a bigger picture here. We're starting to get a better story here. Let's take a look at the earnings report. First, let's look at their operating metrics. MAPCs, I don't remember what that stands for, but these are like individual customers in millions. They went from 93 million in quarter one of last year to 103 million this year. So you can see the numbers are still going up. Yes, it's lower from last quarter, but last quarter didn't have a virus situation. Trips, also up from last year. Gross bookings, although they did take a major hit from last quarter to this quarter, they went up from this quarter last year from 14.6 million to 15.7 million in gross bookings. Looking at the rides, you can see rides did take a hit, but they still got 10.8 million in revenue. That's down more than expected, but I mean, that's to be expected. If you listen to the earnings call, Dara, the CEO, he came right out and said it. I mean, rides took a shit this quarter thanks to the virus situation. I'm really surprised they took in a profit, which is, it's actually kind of admirable for this company to be doing so well in this situation. I mean, maybe there's a reason their stock price went up. Let's continue. So the ride situation, absolutely fucked. I'm not monetized. I can still say fucked. The eat situation, that went up. Like I said earlier, people got to eat, right? People locked up, quarantined inside their homes. They're not going to go at the restaurants. They should be cooking home-cooked meals, but a lot of them aren't. So they're going to order out. Each business just made a killing this quarter. Let's take a look at their income sheet. They went from 3 billion. Now this is in millions, so they went from 3 billion last year, this quarter, to 3.5 billion this quarter. Loss, I mean, they've been losing every quarter. They haven't been profitable yet, full disclosure. Loss from operations, they went from a $1 billion loss to a $1.2 billion loss. To be expected in this market. I mean, they took some hits to their ride service. Now, this is a number that a lot of people focus on. They went from a loss of $1 billion to a loss of $2.9 billion. And that greatly attributed to their earnings per share net loss of 1.7. Now, that is down a lot from this quarter last year, but analysts expected a lot more. I did some digging, and I can explain why. Uber reported that they had a pre-tax impairment write-down of $2.1 billion, and that attributed greatly to their $2.9 billion loss. Let's take a look why. Uber had invested a great deal of money into a Chinese ride-sharing company called Didi. I'm not going to try to pronounce that name. I'm not even going to try. If you've been living on planet Earth for the past year, you probably know that a very, very terrible virus situation, a pandemic, had gripped the world. China had been on lockdown for months and months and months on end, which crippled the profits of Didi. That means all the assets that Uber recorded during the acquisition had to be written down because Didi had greatly reduced in value because of the virus situation. And because of that, Uber had to write that down as a loss. A $2.9 billion loss. Well, hold on. I'm sorry, a $2.1 billion loss. My bad. The total net loss is $2.9 billion. So if you take down that loss, that net loss of $2.1 billion would have turned into a tax benefit of $1.1 billion. And if you look over here to the adjusted EBITDA, if you take out all the stuff related to the COVID-19 impact, it goes from a net loss of $2.9 billion to a net loss of $612 million. Huge difference, right? Most of the negative stuff that's happening to Uber right now is not Uber's fault. It is a result of the global pandemic that is crippling the economy. Thinking investors might be seeing that. And not only that, let's take a look at something else. Here's a Yahoo Finance graph of their stock for the past 3 months. Before the pandemic hit, they were trading at $41. At the worst of the pandemic, well, at the worst of the bear market, or whatever you want to call it, they were trading at $14 at the very worst of it. I would dare to say that all the negative impact of the COVID-19 situation might have already been priced in prior to the earnings. I mean, it should have surprised no one that the rides industry was impacted gravely. I don't think any investor listening on that earnings call or anyone invested in Uber was surprised that Uber took a hit to the rides business and that the rides business would suffer greatly. I don't think that has surprised anyone. Another thing we need to look at, and this is unfortunate, part of the Uber's earnings announcement on the conference call, they announced that they are going to cut 14% of their workforce. That is very sad to report, but a lot of times those job cuts usually result in bigger stock prices. It's a very, very sad reality, but that's just the case sometimes. That is another thing to consider when thinking about the stock price jump. Another thing to consider is that Dara, I'm not going to try to pronounce his last name. I just know the CEO's first name is Dara, so that's what we're going to call him. I listened to his earnings call. He announced that with the surge in food delivery and as places start to open back up, they are starting to see volume pick back up. They are starting to see rides pick back up. As the country starts opening again, as the economy starts opening again, they're seeing some early signs that things are starting to return to a form of normal. That's just what he said, but that could also be a reason why investors reacted favorably to the Uber stock. And lastly, so the lighting changed since I started recording. And lastly, there is one thing I want to bring up. The quarter for Uber ended in March. I mentioned this in my last video, but the quarter ended in March. All the shutdown and quarantine stuff, especially in the US, that didn't start to take effect until the middle of March. And then the quarantine lasted throughout April. And it's still lasting. It's only just now starting to open back up. Uber is not going to feel the brunt of the impact this quarter. And this quarter's report. Next quarter is what you got to watch out for. So we are going to have to stay on top of the news. We are definitely going to have to see what Uber reports the second quarter, because that's the quarter that might get hit the hardest by all the shit that's going on. But anyways, that was just speculation. I mean, who knows why the stock price is up? The market does not follow logic. As anyone who's been investing for a while has figured out, yeah, the market is not following logic whatsoever. But anyways, I hope you enjoyed this video. I'd like to thank you for watching. Have a great day. Eat your vegetables.